let me tell you a story about finance, about power, and about one of the most audacious bets in history. This is a true David versus Goliath story, only in this version, Goliath is the entire economy of a major country.
And it all boils down to this number, $1 billion. That's how much one man made in a single morning by betting against a nation. The question is, how on earth is something like that even possible?
I mean, this quote just says it all, doesn't it? On one side, you have the full might of the British government, doing everything in its power to protect its currency. And on the other side, you have a single trader who was absolutely convinced they were wrong.
So that's the big question we're going to dig into. This is a story about seeing a critical weakness that almost nobody else did, and then having the nerve to risk it all on a truly massive scale. Okay, so to really get how this happened, we've got to set the scene. We need to look at the battlefield and figure out what made the target so vulnerable in the first place.
So back in the early 90s, there was this thing called the European Exchange Rate Mechanism, or ERM. The big idea was to create some economic stability by kind of linking all these European currencies together. Britain joined, and in doing so, they promised to keep the value of their pound sterling locked in a really tight range with other currencies, especially the super strong German Deutschmark.
But here's where the cracks start to show. You see, Germany's economy was booming, which made their currency, the mark, incredibly strong. Meanwhile, Britain's economy was stuck in a recession, so the British pound was naturally getting weaker. But because of this ERM promise, it was being artificially propped up to look strong. It was, in a word, overvalued.
And this is the absolute key. The Bank of England was basically painted into a corner. They were stuck defending a promise they just couldn't realistically keep. They had to keep buying up their own currency to keep the price high, which made them a giant predictable target for anyone who was betting that the pound was eventually going to fall.
All right, so you've got your target, but every great heist needs a weapon, right? Well, in this financial battle, the weapon of choice was a strategy called short selling. Now, it might sound like some complicated Wall Street jargon, but the idea is actually beautifully simple. You're just making a bet that something's price is going to go down. You sell it while it's expensive, buy it back when it's cheap, and you get to keep the difference. Simple as that.
Let's just walk through it real quick. Imagine you borrow $1 million British pounds, step 1. Then you immediately sell them on the market for, say, $2 million US dollars. That's step 2. Then you just wait. If you're right and the pound's value crashes, you can buy back that same £1,000,000 for maybe only $1 million US dollars. You give back the pounds you borrowed, and poof, you just made $1 million profit.
And this is where our main character enters the scene. The legendary investor George Soros and his quantum fund looked at the British pound, saw that it was artificially strong, and saw a huge flashing sign telling them it was going to fall. And they prepared to short sell it, not with millions, but with billions. Okay, so all the prep work is done. The stage is now set for this epic showdown between a hedge fund and a country's central bank. This one day would go down in history as Black Wednesday. On September 16th, 1992, everything kicked off. In the morning, Soros and other traders started dumping billions of pounds on the market. The Bank of England fought back, desperately buying up pounds to keep the price from collapsing, but the selling was just relentless. In a last-ditch effort, they jacked up interest rates from 10% to 12% and then announced they were going to 15%, trying to bribe investors to buy the pound. But it was just too little too late.
Think of it like a financial tug-of-war. For every move the Bank of England made to defend the pound, the market, led by the quantum fund, just pulled harder in the other direction. The more the bank bought, the more the market sold. It was a test of will, but more than that, it was a test of financial firepower. By the evening, the British government had burned through an estimated 27 billion pounds of its reserves, trying to prop up the currency, and it still wasn't enough. The selling pressure was just too massive. They had to surrender. The market had won. So the battle is over. The dust has settled. What happens next? Well, the fallout from Black Wednesday was immediate, and it was dramatic. That very same evening, the government basically waved the white flag. They announced that the UK was pulling the pound out of the European Exchange Rate Mechanism. The very system they had just spent billions trying to defend was gone. The pound was finally allowed to float freely, and its value plummeted. And for George Soros and his fund, that colossal bet paid off spectacularly. As the pound crashed, their short position exploded in value. They bought back all those pounds they'd borrowed for way cheaper and walked away with a profit estimated to be around $1 billion. But, for every winner, there has to be a loser. And on the other side of that incredible win was this, a staggering loss. The British taxpayer was suddenly on the hook for a bill of over £3 billion. It was a brutal reminder that in this kind of battle, one side's gain is another's loss. The legacy of that one single day is just immense. George Soros was forever known as the man who broke the Bank of England. The whole event became this huge cautionary tale about why locking your currency's value can be so dangerous. But really, the biggest thing, it was a wake-up call to the entire world. It proved that a private investment fund, if it was big enough and bold enough, could literally take on a major country and win. Global finance was never going to be the same again.
Which really brings us to a huge final question for today. It's been over 30 years, and the markets are faster, bigger, and more connected than we could have ever imagined back then. So when you look back at this story, you have to wonder, who really holds the power these days? The governments, who are supposed to write the rules, or the global markets that have proven they can break them? That's something to think about.